Good afternoon. Welcome to the weekly Sonar Market Insights webinar. We're going to go ahead and get started here in about a minute. This week's webinar, we're going to do about 30 minutes of market analysis, introducing a few new data sets and explaining them, and then open up for the last 10-15 minutes for questions. So a little bit shorter this week compared to the previous weeks. We feel like we're starting to get some good understanding from our users and followers here on the webinar. So keep them a little bit shorter here and kind of be more direct with what we're covering. So we have here, as usual, the Sultan of Sonar, Zach Strickland, who's going to take us through some of the new additions and the market insights this week. And with that, I'll hand it over to Zach to get us kicked off here.
All right. Thank you, Brad. So we did add a few more new, tickers or available data points in Sonar this week. We'll go over those here briefly and then start kind of digging into the market in general. So I think we've gone over head haul pretty extensively, but I do think it's one of those that kind of needs a little bit of refresher every time we talk about it, just because it is a little bit more complicated to think about. The head haul index noted by the HAUL ticker is a measurement of the outbound minus inbound volume. So when you have an increase in outbound volume over inbound volume, you get an increase in haul. Or if you have a decrease in inbound volume and outbound volume stays the same, you will also get an increase in the haul index value. Now, what this means is essentially if you have a really high haul volume or it gets higher over time, you're exposed to capacity being less in that particular market or the area. And the area that I kind of want to highlight right here is the Charlotte market, because it's obviously just had a lot of flooding, a lot of, the hurricane came through there and kind of destabilized the area. People left the market pretty quickly, and then they came back in, and it created this, kind of ripple effect in the area. So we've added head haul index weekly, biweekly, and monthly changes to Sonar. And I think the biggest value of this index is in the map, because it allows you to kind of visualize or see, like, where am I supposed to look today to see where there's potential capacity problems. So what you're seeing here is the head haul index weekly change. So you see over here in the Charlotte market, it is very blue, dark blue, which means that there has been a significant increase in head haul index value. Well, you see that the head haul index is actually at a -50, which means that this market normally operates in kind of this backhaul market scenario. So there's a lot more inbound than there is outbound. So when you send a truck into Charlotte, it's more difficult to get a load out when it's in that negative value. But since it's dark blue, you see down here, the head haul index weekly value is 25, plus 25. So that means 7 days ago, your head haul index was -75. So there's been a big change in the head haul value in Charlotte.
And one thing to note as well, a lot of the data sets, the updated daily sets around electronic tenders will list tender in the name, whether it's tender market share, tender rejection, tender volume. The head haul index does not actually list that. So just want to note as well that it's based off the same data sets and it's using the electronic tender. So it's the daily updates, even though it doesn't list tender in there, as Zach mentioned, is the outbound tender volume minus the inbound tender volume. Just wanted to clarify that.
Cool. Thanks. So so essentially what we're seeing here is that we've now had a big movement in the head haul index value, which means that the capacity situation in Charlotte has changed. This is not terribly unexpected as people kind of go back to, as the floodwaters have receded and people have kind of gone back into the market with tremendous force over the last, they went back into Charlotte after the hurricane passed through. to kind of, a lot of shippers had moved their freight out of the area. A lot of trucks had positioned themselves out of the area to avoid a lot of the potential impacts and damages of the hurricane. And then they went back into the market, and now it's kind of returning to normal after the week of activity. Yeah. But again, the real value of knowing what the head haul index is doing is essentially just to give you a heads up on what potential capacity situations may arise. Whenever you see some sort of volatility in a market, that means that something is changing fundamentally, which means that you will probably end up seeing some sort of capacity, either stabilization or destabilization in the area. And Charlotte is a very inbound heavy market. It's a consumer market. So we like to call it a lot of banking infrastructure in the area. So they don't produce a lot in that market for sure.
And where does this fall in your daily, I guess, routine or daily analysis? I know we've previously kind of set forth a number of different data sets to go through and look at, and kind of guided our users in a certain order. So where does adding head haul index, where does that fit with market share and volume and tender rejections?
So I really like to look at the head haul index, kind of weekly value. And it's probably one of the first 2 or 3 that I look at when I'm looking through the map, the daily map, just to kind of figure out where my biggest like movers and shakers are. So if there's going to be any kind of real capacity situations, that value is going to move significantly. And obviously, when you have more outbound over inbound, that's more interesting to me, because that means that you have more trucks leaving the market than coming into the market. So when something's getting really white or, cool down, like you see here in the Chattanooga market where we are, that means that there's been like a lot more inbound coming into the area than in the last 7 days or 2 weeks or monthly. And that's kind of an important thing to note in trend analysis. When you're looking for near-term patterns, obviously the weekly is kind of where you want to look if you want to get ahead of things. But if you really want to kind of fundamentally know what's going on in the market, you need to get a kind of a longer term idea of how that market operates. So that's why it's, one of the cooler features that we've added here in the last couple of weeks is clicking on the market to kind of get this rundown of values. The head haul index is up there at the top. Mm-hmm. It's one of my favorites to look at, because it tells you just at a quick glance, by clicking on this, I now know, hey, this is actually a pretty heavy inbound market. So what we would call a backhaul market right now. And noting that it's pretty volatile too. When you have a 25-point jump in the head haul index value, that's a pretty big jump. Mm-hmm. But I'm also looking at this 2-week value to get kind of a little bit more weight to how important is this 25. So I see 2 weeks ago it was actually 14 points lower. So it was sitting at 64. And then a month below that, it was actually sitting at 54. So we've had this big hiccup. Just by looking at these 3 values, I can now kind of add weight to that negative 50 number. Mm-hmm. I now know that this market may actually operate at about a negative 54 in the long run. In the near term, in the midterm, it was actually bounced down even lower. Mm-hmm. But then we had this huge, correction, if you want to call it a correction, over the last week. So I know that there's something significant happening in Charlotte right now. That's kind of the rundown of if you're looking at near term versus kind of long term trend patterns. And obviously, we can pull up the chart on the.
Actually, while we're on that, let's grab this first question really quick, because it kind of, while we're on that topic, it's right in line with that. Asking about the indices where a percentage change is the output. So is the weekly, biweekly, monthly change a relative percentage change or a true percentage change?
It's the absolute percentage change.
Okay.
So yeah, so when your head haul index value is, 75 and it's moving down 25, it's moving down actually 25 index points, I should say. So it's not a real percentage per se. So you would actually have to say, okay, 25 divided by, 75 or 74, whatever it was.
And if
to get the percentage
If we're
value.
looking at like tender rejection percentage, though, that's going to be
that's a percent value.
Okay.
Yeah, that is a true absolute percent value. So OTRI USA moves from 18% to 20%. You're going to get your OTRI W is going to be a 2%.
Okay, perfect.
If that makes sense.
Yep, I think that's exactly what the question was. The only time we'll have relative percent change is when we're looking at chart comparisons.
Exactly.
So if you're comparing two charts and the display form is on relative, you're looking at the relative percent change of the time frame that you're looking at.
Exactly.
Okay, and hopefully that answers that question. If not, certainly let us know and we can further discuss maybe offline. But
right on.
Hop back in. Sorry for the.
No, perfect. We like those. So I pulled up the head haul weekly index weekly chart for Charlotte just to kind of get a sense of what this market is. So this up and down movement means that this market actually is pretty volatile. So it'll go up and down quite a bit. And that means that you're having these switches in amounts of inbound versus outbound volume occur over time quite a bit. So here's the hurricane impact right here. You had a negative 40 weekly change. So that means that you had about 40 more inbound over outbound. So it's like the ratio of outbound to inbound, if you will. So it became a lot more inbound heavy, and then it shot up to a lot more outbound heavy. And when this outbound, when it starts turning green, that's basically the precursor for spot market activity and rate increases.
Right.
And I think the others are pretty self-explanatory. Haul F, which is your biweekly. So every 2 weeks, you're going to see, it's a lot less volatile in that space. So that's your 2 week change. And then your haul M is your monthly change. And there you go. So these are going to be a little bit more smooth than your shorter term kind of changes. Let's see. The next thing that we added, and I really like this one, is the OTRI state granularities. So it's also the ITRI state granularity. So what this is doing is basically grouping up all the tender rejection indexes that are in a state and aggregating them into one number for each state. What this is doing is it's enabling you to kind of see what the market, all the markets in California, for instance, are doing what. So you can see that this is going to combine like San Francisco, Los Angeles, Fresno, the entire California state into one tender rejection. This will enable people to kind of group areas together a little bit better. Like if you're in charge of a region, for instance, we can then group up like, Utah with California, then Arizona, and you can build your own little mini region and just kind of see what each state is doing in relation to the other. This is pretty useful in the way that, look at Utah right now. Again, this higher level granularity enables you to kind of more easily kind of say, okay, what's happening here? Let's, I don't want to look up, the individual market codes. I can now go in. I know what all the postal codes for the states are, AZ, UT, CA. They're all pretty easy to remember. Most of us are pretty familiar with those. You group those into a region, you can actually kind of go in and more regionally, analyze what the freight market's doing in those areas without getting overly granular. I'm looking at positioning my trucks in California this week. I can see that it's pretty flat out there right now. We've got a slight uptick at 11% tender rejections. I feel pretty good about it as a fleet manager. Put that out there. I can pull back here. It's about to be bid season as a lot of people kind of start submitting bids, and the shippers are going to start submitting bids to carriers to try to get in front of things. I know that a lot of people have taken pretty heavy rate increases this year. Now you can kind of look back over the course of the year, and your carrier can either say, hey, your market was extremely volatile this year, we have to give you another 4 to 5% increase so that we can keep up with the increasing costs. And the shipper can do the same and say, hey, you know what, we really didn't see that I think I can help you out this year because I can look at these tender rejections and kind of tell you, all right, we operate heavily in the state of California, and it's been pretty quiet over the last few months. We can really, be loyal to you if you lower the rate a few more percentage points or whatever it is that you're trying to negotiate there. So there's a lot of negotiating power in these numbers because, and what it's doing is telling you what the actual contract market did this year. Mm-hmm. So you know what you did this year, but you don't know what everybody else did. So this gives you that kind of a little bit more powerful insight, and you don't have to be so specific with knowing the Ontario market versus the LA market versus the Fresno market. You can say, the Western region just wasn't that crazy. Or you can even dial in and say, hey man, Arizona, not that that's a big insight that Arizona is
True.
It is something that you want to ship, like it's easy to ship out of, but
this is a booming.
But you can still see their seasonality in each one of these markets and each one of these states. I think that's the point here, is that there's little anomalies here that you can use and point out and say, hey man, even Arizona has its moments where.
No, and I think very valuable on that higher level. And right now, just available in the chart. You're not going to be able to see on the map. It's still going to be in the X market regions at this exact moment. Down the line, maybe the ability to split up by state as you're viewing here on the chart. But I think that's interesting, that what you started talking about in terms of rates and capacity and tender rejections, and talking about bids coming up. And I think that is a nice lead into what we want to talk about next, and that is how tender rejections and volume can show or be a indicator of capacity and rate based on the carrier behavior from a rejection standpoint.
So I'm gonna back out a little bit here to kind of make a bigger point. I'm going to use a baseline here, which is, again, for those of you that haven't seen some of the display tools and functionality up here, to look at the displays and studies and kind of play around with those. There's a lot of use there in terms of trend analysis. So the baseline, what it's doing is showing me basically, here's my baseline point, which actually it starts back here on March 1st, and anything above that point is green, anything below it is red. And you really want to kind of pay attention to these large areas underneath. Now, this is Labor Day effect, July the 4th, Memorial Day right here. So those are really kind of expected anomalous things. What I'm looking for is this right here. So I can see back in this period of time where everybody was kind of like really thinking, hey, this market is crazy. The volumes are still out of control. What this is telling me is that March actually did have a pretty good little spike in volume, but then it rapidly fell off on April 1st and then kind of moderated until mid-May when volumes picked back up really rapidly and they came back down. And I don't know about everybody else, but August was really boring to me as a market analyst. Like, it was as flat. It was the definition of flat in the freight market. Look at the volume. It barely moves up. It doesn't even go up 1%. It goes down just over 1% before kind of waking up here at the end of the month when all the shippers are like, hey, let's get out of here. Let's get our freight out of here. We want to take our holiday on Labor Day and get out of here. But the interesting thing to me is that volumes are actually elevated over this period of time where everybody was kind of just accepting that the market was volatile. They were taking these rate increases, just saying, hey, the freight market, it's kind of crazy, but it was actually still higher in this period of time. But if you compare that to the tender rejections, and I'm going to pull this up on a separate screen for now, just because it's easier to display on the screen we have. And you can see the tender rejections did not follow the same pattern. And that happens for two reasons. Now, tender rejections are not totally tied to volume, which I think we've described before. Tender rejections are kind of a carrier sentiment. So everybody kind of understands volume and how it kind of impacts the freight market. But what people don't really know is, well, is the carrier really turning me down because he's got too much going on, or is he turning me down because he's got a better deal somewhere else? And what happened back here was, yeah, he had some extra volume, but he was also getting a pretty good deal elsewhere. he could play in the spot market. I mean, it does follow it a pretty good bit, but the second part of this equation, other than just carrier sentiment and getting a better deal elsewhere, is the fact that they have added capacity more than likely to the marketplace. So they're more easily, they're able to kind of easily, mitigate some of these volumes with additional capacity. I think the reports of all the OEMs being, backlogged for months on end. I think we just got a trailer report of 142% year over year trailer orders. So Great Dane and Wabash are working overtime. And then you've got, the Class 8 orders breaking records again. I think there were like 53,000 orders in August, something like that. So these trucks they're not just decommissioning a bunch of trucks. Somebody's getting in these trucks and they're driving them. It doesn't mean that the driver shortage has gone away, but we've kind of figured out, there has to be, with this booming economic cycle that we're in right now, there's so much extra capital. These carriers are making money. It's one of these longer run economic expansions that we've had in a long time. It's coming out of a period of time where we were cutting costs. 2016 was an extremely, low volume year. And you kind of put that right next to the fact that the economy just exploded in 2017 and now into 2018. There's some incremental capacity being added to the marketplace. Now, is it enough? The volume certainly didn't surge into, the month of September. It's starting to look like it's picking back up, taking you back to this OTVI USA year-to-date situation. You can see it's ticking up about 2.56% up. I think I should probably go over how I know that's 2.56% because this is an index. It's a 10,000 is the base unit set on March 1st. So 10,256 means that we're 2.56% higher than we were on March 1st in terms of volume. And so you can kind of see right here at this peak level, we were at about 10.6% above March 1st volumes in the middle of June in the entire country. So from here, we can kind of glean, these guys they've had enough time now to put some of these units out on the road. We've had enough time to get some of these orders in. They're still backlogged. The tax cuts obviously created a ton of investment opportunity for some of these carriers to go out and kind of reposition some of their fleet. Like they can now turn some of their fleet over. A lot of these small carriers can now suck them up. Mm-hmm. And something else I kind of want to illustrate, the hours of service. This is another part of the equation that we've kind of picked up on. So I'm actually going to kind of create kind of a crazy chart here. So bear with me. This is going to be one of those shared view or these stock views that I look at to kind of give me a better idea of what's going on. I'm going to shrink that down a little bit. So we think that essentially, and what I'm pulling up here is the hours of service. We haven't talked about this one as much over the past few weeks, but what this does is the HOS 11 is a measurement of drive time utilization. So when you have your 11-hour clock and your 14-hour clock, your driver's allowed to drive for 11 hours. And then, obviously he has his break periods in there. And the 14-hour is the total on duty plus drive time. So he can be at a dock on duty for 3 hours and he can drive or be on duty for 11 of those hours. And what we found here is around the implementation of the ELD, you get this extra kind of bump. If you're following the moving average here, it kind of illustrates because it kind of helps smooth out this line because you have this, industrial pattern of weekly activity in the driver. And that's what you're seeing this choppiness in is they're driving more, Tuesday, Wednesday, Thursday than they would at other periods of time. And putting a moving average on this really just helps you see what it's doing in general on average. And you can see here about April 1st, it kind of kicks up a little bit. And it's not directly proportional to the volume. So we can kind of glean that these guys are actually getting about 1% to 2% more efficient, at least on paper, in their drive time utilization. So they're able to drive a little bit more, which is approximately 12 to 15 minutes more than they were prior to the ELD implementation. And then I think that's pretty much the point I wanted to make with that. But that combined with some of these capacity increases, you now have a market that's a little bit better able to manage this volume. And again, it's only a 2% volume increase since March. You combine that with the carriers having just put in all these contracts in the early part of the year, and they now, they're less willing to turn down loads. They've got their rate increases in. They're able to manage their fleets a little bit better, even though it's small. I know that 1% to 2% seems small, but that is a massive cost boost. If you can get 1% to 2% more efficient at your driver management, you're doing pretty well. And then of course you have the capacity increases.
So when drawing the comparison or correlation with the tender rejections and the volume, part of the reason we're in the lower tender rejection percentage as it compares to the rest of the year has a lot to do with rate increases for the year between 10 and 20%, depending on the lanes. And some of these brokers were able to receive. And then on top of that, the gained capacity, one from the ELD mandate in utilization, and also from pure actual capacity and new trucks, new companies entering the market, maybe reinstating that authority that they
I'm going to invoke my economics in here a little bit. We don't talk a lot about the kind of the economic indicators that are in SONAR right now, but I'm pulling up the employment levels for truck transportation. So this is a pretty interesting chart. It's not seasonally adjusted. We have both seasonally adjusted and non-seasonally adjusted. And you can see here that, and again, there's some dock workers and various people involved in trucking listed in here as well. But coming out of 2014, which was considered one of the better years for freight, people hired a bunch of people. And then, they kind of went down as the freight market followed. And then 2017, everybody's like, is this real? They're hiring people back again. And then 2018, way up. We're obviously, we've broken through, 2015 levels of when people were hiring people and bringing people into the transportation industry. So I think that definitely has to spill over to the driver market at some point. Like, these are not just straight dock workers and, kind of trucking employment people. This just kind of shows you that we're in a growth cycle. Obviously, it's going to come to an end at some point. I think a lot of people, that's one of the things, everybody kind of sees these cyclical charts and they say, well, look, man, it's going to end. And I'm like, well, yeah. But I think I heard a quote the other day that was actually pretty cool. And it's pretty obvious and it sounds really cliche, but the guy said, bull markets don't die of old age. So it doesn't just die because it reaches some sort of expiration date. And right now we're not seeing any kind of real significant changes to any of the economic indicators. And I'm going to pull up one that I like to look at. And I think our chief economist, Ibrahim, kind of cites a lot. And this is the housing starts. So everybody's kind of, this is like one of the only glitches on the economy right now. And total housing starts in the United States took a huge jump in August after having two pretty disappointing months. Again, still year over year, looking fantastic. Still up year over year, but everybody's kind of like, look, man, the economy's slowing down. It's like the sky's always falling. People start talking about how it's going to end someday. And you know what? Someday they're going to be right. But you got to look at what you're looking at. Like, that day may come, but we're not seeing it right now in many of these economic indicators that we're looking at. And I think one of the most unique things about what's happening right now is we're having this one expansion right after one of these compressionary periods where freight market kind of, died out for a little while you're looking at, I'm going to pull up the Cass shipment index to kind of illustrate this a little bit more. You can see in 2016, this bump was pretty subdued in comparison to the rest. And then all of a sudden 2017 ramps right back up to like 2014 levels. And then 2018 takes off and says, see you later, 2017. We just broke through again. So again, not a lot of, these guys had just cut all these costs. So they were pretty lean to begin with. Then the market expands rapidly. So there's all this excess capital. They hadn't had any time to be fat because they just trimmed it all.
Right.
And so they're getting tax breaks. They're buying equipment up like crazy. It's like a kid in a candy store. So until people stop spending money and investing in stuff, I think you're going to see this continued kind of expansion throughout the fourth quarter probably. I think I would look to have a pretty big holiday season. Some of these SONAR indices are really going to help you, as this capacity kind of enters the market, you're going to then have a gauge, watch the tender rejection indices to see what your specific market is doing. You never really know how much capacity is in a market. I mean, volume is good to look at, and it does tend to lead to what's going to happen, but it doesn't necessarily have to mean, we're going to see this huge spot market increase and therefore contracts, et cetera, et cetera.
Right. No, that's very interesting. And I think that's a good, unless you have something else you want to go into, I think that's a good stopping point. We have a few questions. Oh, you want to grab?
Yeah, we did do some things. We did add another couple of things like the truck WFM. So we talked about how we kind of just revised truck last week.
So actually we do have a few minutes to go through. I know you talked about it a little bit last week, but maybe just quick explain what truck was and what it is now.
Okay. So truck effectively was this kind of rolling index, if you will. So it took the average of like the previous 2 weeks value in any given market on that day. So if the previous 2 Mondays had 10 trucks in the market on average, and today there's 11, you would see a 110 value in truck. And I'll go ahead and just pull up truck.usa to kind of illustrate this, if I can pull it up.
So really what the reason we changed it was that was showing more of truck movement across the country with the 2 week average, and now we're trying to show.
All we did was make it easier to understand.
Okay.
It didn't really it still does effectively the same thing, but now you can think about it instead of like this rolling 2 week moving number. It's now like, okay, this 104 value means that you're 4% higher than you were in the first week of April.
Okay, and that's daily as well.
Yeah, that's a daily number.
Okay.
So
it's indexed at April 1st, and we chose April 1st.
Now the first week of April is basically the ELD mandate.
Okay.
So it makes the data more reliable because there's more, activity, more user information in that.
Sure.
In that database. And we've added the weekly, monthly, bi-weekly changes to that, and those are made by putting the WFM at the end of it. So that was another thing we put in.
And what's the 0.6 telling?
So it's saying that the truck, the weekly change in trucks has been about 0.6% higher than it was last week. So that's what it's telling you.
So it's absolute percentage.
It's absolute, yes.
Okay. Yeah, that's a lot easier.
It's far more simple to understand.
Yes.
And you can see this spike right here, the Labor Day is having an impact on the weekly change.
All right, you want to jump into a couple questions?
Yeah, let's do some questions.
All right, so we kind of danced around this a little bit before the question was asked, but asking us to talk about correlation between price and tender rejection.
Yeah. What's the specifics? Is that just the...
Yeah, just if you could talk what the correlations are between price and tender rejections.
So essentially, when carriers are turning down freight with increasing rates, now we haven't essentially figured out the exact correlation, because what we found is that every market has its own unique footprint. So it's hard to kind of pin down an exact correlation, but we do know that there is some level of volatility involved. So Los Angeles, for instance, when it goes up, 5 5% in any given day, there's definitely some of that spills into the spot market. So that means like you have to have some sort of weight that we're actually working on calculating right now to figure out those exact numbers and figures that at some point we will put into SONAR. And then there will be kind of this, there's also this longer run impact. So as tender rejections go up over time, if they go up long enough, there will also be presence in the spot market. So the rate pressure will go up if you have like this, it may not need to go up 5% in a day, but if it goes up, 0.5% every day for like 10 days, you then have, at some point it definitely increases, it spills into the spot market. Now, the thing to get in front of that is the head haul index. That's the one that kind of leads it all together, because that's an absolute measure of capacity. As outbound exceeds inbound, if you want to get real fancy with it, that's kind of what will start leading to tender rejections, because there won't be trucks in the area. And that's more based on volume than it is on carrier sentiment. Like I kind of noted earlier in the program, is kind of like, it's not just about volume. There's also like an idea that carriers can decide effectively to go to the spot market. And that's where tender rejections kind of come in play real heavily, is when you're seeing these increasing or decreasing tender rejections, your rates tend to follow that pretty closely.
Perfect. And hopefully that sheds a little light and better answer that question. Again, if it does not, please note and we can reach out offline. We have another question. Do you have any indications of various seaports as locations? I believe that's just asking if we have port data essentially and what locations. We do have the spot container pricing for 40-foot SEUs, the FreightWaves Baltic Exchange. That is not granular down to an exact seaport or exact port. We are currently working with container data in terms of volume and commodity. It's not standardized in the way that we're receiving it. So there's a lot of legwork that's going into it to allow our data scientists to essentially scrub the data and put it on our SONAR platform. So I don't know if you want to add anything to that in terms of port data. And
we are working on some port data. Hopefully have that here in the next month or two, where we will have some form of measurement of kind of port activity. We have to do some validation studies on that and make sure that it's good and clean, and then you can make some legitimate decisions off of it first. Like you said, the FreightWaves is pretty much the one thing that we have right now that's directly related to kind of ports and ports activity. One of the things that we did see this past year was that the spot rate did go up. They kind of pulled a trucking move, and they kind of managed their capacity and started saying, well, hey, we're going to increase rates on you. And they pulled down capacity over the course, like after all these tariffs kind of came in. So a lot of this has some tariff, concerns built into it, as the spot rate from China to North America West Coast kind of started going up. And you can compare that to the China to North American East Coast. This rate also went up, almost mirrored it. Obviously, it costs more to go to the East Coast than the West Coast from the China West Coast. Shanghai and all that's a lot further away.
So stay tuned. Basically, we do have some stuff with FreightWaves, but stay tuned for some more specific port by port, location, volume, commodity data will be coming soon. Next question, which I believe we somewhat touched on: is there a good way to weight tender rejections with tender volume data? And I think I think essentially the head haul index is a really great one to
weight tender rejections with tender volume.
Yeah.
Well, tender volume kind of gives weight to tender rejections, if you will. So yeah, that
Well, and saying that tender volumes can be a precursor and
Yeah, like if you're looking at, let's go out and look at like the otri dot CLT. I actually think I like, I mean, OTVI, so it's a, it's got a 25% tender rejection rate. I actually kind of like the OTMS to give weight per se to the overall market, because this basically tells you, and I pulled up Charlotte here. This basically tells you that Charlotte represents 1.6% of the total freight volume in the country. So that that's actually a pretty significant area for outbound freight activity, because I think the largest one in the country is Atlanta, and it hovers around 4.5 to 5% of the overall outbound freight volume in the country. And you can do the same thing for inbound by doing the ITMS. So whenever you see tender rejections move in a market and you want to know, well, wait a minute, does Billings have any significant freight volume? And you can go over here and say OTMS, BIL, look up your Billings market, and you can see, no, it really doesn't. 0.01% of the total outbound volume in Billings, or in the total country, comes out of Billings, Montana. So I guess that's kind of the way that I weight it. These volumes, I kind of look at OTVI and OTRI kind of next to each other to kind of figure out, is volume creating this?
Right.
But the head haul is, like you said, kind of the precursor to all that, because it's not necessarily totally volume based. It is capacity, carrier sentiment, as well as volume. I mean, that's essentially, because you could have flat volume and capacity dries up, and then you see elevated tender rejections.
Yeah. And as with all, I think the consistent thing that we try to say and to let our users know, that the thing, whether it's percent rejection or tender volume or market share, every market operates differently and is affected by different factors. So monitoring the change is really the important thing. So in talking about head haul index, for example, I know you showed the I think it was Charlotte, right, with the negative value, and you talk about markets like Seattle and LA. They're gonna operate in completely different ways in terms of inbound, outbound volume. So really monitoring the change up and down is what you want to look at. And then I think drawing and looking at the tender rejections alongside of those changes is really what is the important thing to look at.
You definitely want, like, I look at volume as kind of like the first thing to look at, because a lot of the time, yes, it is volume. Like I pulled up Charlotte right here on the outbound tender market share, and you can see this huge jump in market share value on the outbound, and it's right, in front of the hurricane.
Right.
And you see it's moderated quite a bit as people have moved everything out of Charlotte.
Right.
Definitely. So
we still got a few more, so hang in there with us, everyone that's still online. With respect to the hours of service drive time utilization, based on the SONAR data sets, is there a way to estimate a measure, whether it's hours or percentage of available hours, that would be optimal for each region or for a given region?
That's a great question.
Yeah.
But it doesn't happen in SONAR right now. I wish we could do that. That would be pretty good. And we have actually started doing several studies with a lot of our data to kind of see if we can kind of judge what specific behavior patterns and regions are that are optimal, that lead to improved utilization. We just have not gotten to that point yet. Making sure that that's, you got to make sure that the data is valid and accurate and all this kind of stuff before you can get there and throw that in there. But yeah, that's a great question.
Let's see. We got I believe this is the last one. Any plans for future integration of load board data to capture capacity information?
Not as far as I know.
No.
Yeah.
And I think, if I may, I think some of the reason is it may not be an exact or a really telling
Yeah,
measure of capacity when
yeah,
you
you
talk
have to
about
be
multi,
you have to be real
post?
careful with load board information because
Yeah.
those, I think it's pretty widely known that load boards can be manipulated. Brokers can throw out some false postings and whatnot. So we try to get as much of our information from like as non-human
Yeah.
sources as possible, like the tender rejection index. There is obviously some level of human element in every piece of data, but we try to make it. We try to get it from places that are very clean and objective.
Mm-hmm.
That means that you can't have, we don't want to have, the ability for somebody to go in there and fat finger something and input the wrong information or manipulate it for
Right,
sure.
exactly.
And load boards traditionally can be manipulated. So that's one of those things that we really have to be careful and stay out of that as much as we
Sure.
can.
And then I think the last one here that we have is around the X market, how we slice up the geographic locations in Sonar. Is there a defined number of zip codes that's represented, and how does it, I think the question referenced comparing to DAT's regions?
Yeah, they are those are based off of DAT's regions because DAT is kind of partnering with us on the futures that's coming out here in the early part of 2019. That's why those are like that. They're designed, they're mirror images of DAT's regions, and their methodology was the way it was explained to me was those were made back in a period of time where they needed to have enough kind of data behind them
Mm-hmm.
so that they could accurately kind of generate reliable information
Right.
and make sure it was useful and valid. So just like anybody, they needed to make sure that those regions were nice and clean. And they just ended up in the shapes that they're in today. I don't think there's any amount of zips or any kind of target number there. I think it was strictly based off of trucking volume. So they basically divided them up based on the amount of volume in the market to make
Mm-hmm.
sure that it is a valid space to kind of measure.
Right.
So that's why you see like Fort Worth and Dallas next to each other.
Right.
They needed to, they didn't want to put Fort Worth and Dallas together because there was too much in there and they would ignore like all the outlying areas. So they needed to make sure that it had enough behind
and
it.
if you look at regions like that, they a lot of times closely mirror each other. Like I know LA and Ontario, a lot of the data in here, other than market share, a lot of the tender rejection data will be very close because they are so close and draw from the same capacity. So also a good point in listing, if you're looking at a region like that, LA or Ontario or Dallas or Fort Worth, to take a quick look at if there's a big market right next to it as well.
For sure.
I think that's all we got. We'll sign off here in a minute and maybe leave it open for a couple minutes in case any last second questions come in. But again, thank you for joining us and for the questions this week. Zach Strickland and Brad Ganane. We will see you guys again next week, Wednesday, 2 p.m. Eastern. Any questions offline, freightwaves.com/sonar. You can contact us there, or sales@freightwaves.com. Thank you again.